Now, time for our segment, Quarter Se Quarter Tak. Sonal is standing by on the big wall. She brings us expectations from the chemicals space in the fourth quarter. Sonal, over to you.
Thank you so much for that. Well, every chemical company has a different fundamental and factors affecting individual performance. But overall, for the chemical industry, it is largely expected to have to see an improvement on a quarter-on-quarter basis due to pickup in exports this time. But there could be a muted performance YOY in some cases due to weak global demand environment in terms of raw material costs. Basic chemicals, they have seen a decline in prices as crude prices, they have fallen 8% on a sequential basis. For oleochemicals, it is down 20% on a sequential basis. We have seen ocean freight costs which are down anywhere between 40 to 50%. But demand pressures will continue in discretionary sectors like dyes and pigments, polymers, etc., something that companies have indicated to us. In the fluorochemical space, sustained high price in refrigerant gases will aid earnings. However, there will be weakness in packaging and textiles business. This is for SRF in particular. And that's why revenue will be flat. EBITDA and profits will be down for the company. However, for Navin Fluorine, earnings will be aided by improvement in high-performance products and specialty chemicals segment, leading to a 56% revenue, 98% EBITDA, and 52% profit after tax growth. For Aarti Industry, which recently saw demerger of the pharma business, we will not be able to compare numbers YOY due to the demerger, but incremental revenue from new capex is expected only in FY24. And that's why revenue is flat in quarter 4. EBITDA will be expected to go higher by 2%, but profit after tax is expected to decline 2%. For oleochemicals player Galaxy Surfactants, it will be a steady performance after some weakness that we have seen. Volumes are expected to grow 6%, out of which performance surfactants will do well, up 10%, but specialty, which is the high margin product, will be flat. For Jubilant Ingrevia, operational metrics will be weak, down between 11 to 15%. This is, of course, on a high base. Acetic acid, which is the key raw material, has seen a 40% decline in pricing, which will lead to lower revenue as well. Generally, active ingredients saw a decline, and that's why performance will be weak. Now, taking you through the stock moves this year and valuations as well, barring few, these stocks have underperformed. So, SRF, Navin Fluorine, they have been up anywhere between 8 to 16%. Valuations for Navin Fluorine are way higher at 45 times. Galaxy Surfactants is up 3.5% with valuations around 23 times. Aarti Industries is comparatively is also on the lower side. If we talk about the newer listings, Tattva Chintan, Clean Science, Chemplast, all are down between 7 to 23%, and valuations are ranging anywhere from 13.5 times for Chemplast to 40 times for Clean Science.
All right. Thanks very much, Sonal, for that. Appreciate it. That's chemicals, and, you know, as Sonal correctly pointed out, this is a very varied space, and the drivers and the earnings drivers for every company pretty much is very different. So while we say it's all chemicals, it is chemicals, but they're very different chemicals. Just a few other names in the market before I bring in our guest who's going to tell us what he likes in the chemical space ahead of the earnings. HBL Power, I highlighted this in the morning. It's up a full 8% on very large volumes, by the way, HBL Power. I think on Friday as well, it saw a very large move. And this morning, it's seeing, a pretty significant kind of move as well. It's from 98 levels. Stocks moved up to about 120 odd levels right now. I can spot Ircon, which is showing about a 5% pop. Borosil Renewables is having a good day, and it's had a pretty decent last 3 days now. JBM Auto is another one which is up 3. Mirza International, of course, we've been highlighting. Engineers India Limited is up about 4.5%. And then, down the list, there are more names, but not backed by too much by way of volumes at this point in time. On the downside, Sun Pharma has seen a full reversal. It's down 2% as the largest volume-led loser at about 968. And then you've got Yes Bank. The management of Yes Bank joins us in a bit from now, 15-16 rupees in Yes Bank. ICICI Pru, Dr. Reddy's, Laurus Laboratories, PVR are some of the stocks on the downside. Delivery is down, Crompton is down, Max Healthcare is down, and Hindustan Zinc is down about 2.25% as well. So that's the market picture for you, Sonia.
Absolutely. And one space which is looking good this morning is two-wheelers. I'll tell you why. Bajaj Auto is actually at a fresh 52-week high. It comes out with numbers tomorrow. The expectation is that numbers could be decent this time around. So there's TVS Motor, Hero MotoCorp, and a lot of the auto ancillaries that supply to the two-wheeler space, Endurance, for example, that are just up and about, expecting perhaps decent set of numbers. But let's get back to the specialty chemical space. We have Rohan Gupta, Director at Nuvama Institutional Equities, who joins us now. He tracks the space very closely. Rohan, thanks for being with us on the show. Good to have you. Tell us a little bit about what you're expecting. Which are the companies that could do well? Which are the companies that could take a back seat?
Hey Sonia, hi, good morning. Yes, so specialty chemical sector, our view is that the current quarter should see some kind of improvement what it was in a Q3. If you see that the sector has definitely been under slight pressure from last 2 quarters. It was also basically coming from a very high base of last year. But we expect that the overall demand scenario has been pretty decent and it has been continuously improving. Raw material prices have stabilized somewhere, and that's what is going to drive the margins of most of these companies going forward. So maybe a little bit weakness in the current quarter, company specific, but overall our view on the sector is very positive. I believe that from Q1 to Q2, there should be continuous improvement across the chemical sector.
Hi, Rohan. Good morning. Like the new look as well, Rohan. What about, where could we see a positive surprise coming in? If I'm looking at Q4, which could be a couple of those companies that we should be keeping an eye out from, or some kind of commodity that we should look forward to?
Thanks, Nigel, for the comment on my new look. So I think that the market, the way it is changing, we should also keep changing ourselves. So yes, so I believe that yes, there is a couple of companies, especially in fluorination chemistry. I understand that the numbers are likely to remain positive. Companies like Navin Fluorine, SRF, these are the companies including Gujarat Fluoro. I understand that these companies will continue to have a positive impact on, as far as the results are concerned. Even if you see that the demand scenario for fluorine chemistry, especially coming from the air conditioning industry, remains very positive. We are expecting a huge, quite summer that is also going to drive the demand growth for refrigerant gases. So as far as the fluorine is concerned, I think that the overall demand scenario is likely to remain positive. Also, companies catering to agrochemical intermediates, we see that have not been impacted in the current quarter, companies like PI industry. So these are the companies we understand that will continue to have a decent result. However, some of the commodities nature of the companies like Aarti Industries, Jubilant Ingrevia, Deepak Nitrite, some of these companies may have slight pressure because of the way the RM prices in these commodities has been falling, and there can be some low impact on the margins also on these companies.
So these companies, right, Rohan, whether it's Jubilant Ingrevia, whether it's something like an Aarti Industries or even Tattva Chintan Pharma, these are stocks that have had deep cuts this year. I mean, over 20-25% falls in 2023 already. Do you see more pressure stock-wise because of the fact that earnings may not improve as much?
So yes, some of these companies have definitely seen a sharp correction. The reason being has been mainly this company was also trading at a very high valuations. There, I think that the valuation correction is over now. As far as the earnings corrections are concerned, I think that the earnings cut is all broadly done. And as I just mentioned in the starting of the conversation, I expect the second half of FY24 is something where we should be seeing the improvement in earnings of all these companies. Also on a low base of this last year, I think the earnings growth will be pretty decent for second half of most of these companies.
All right, we'll leave it at that, Rohan. Thanks a lot for stopping by and speaking to CNBC TV 18. Appreciate your thoughts. That's on the specialty chemical space, what you can expect. The market, by the way, is